Welcome to the weekly aviation news roundup, where we bring you the latest updates from the world of aviation, finance and leasing. Our aim is to keep you informed about the most significant developments and trends in these sectors. And here on YouTube, we share a weekly roundup of the stories from our daily newsletter, which you can subscribe to by following the link in the description below. Let's start this week's roundup with the news that Halo Air Finance has closed a credit facility for Republic Airways to finance the purchase of General Electric CF34-8E engines. Halo, a joint venture between GA Telesis and Tokyo Century Corporation, said the deal is the first under its first fund, Halo One, which was launched in March 2023 with Intervest Capital Partners. Mark Cho, co-head and managing director of Halo, said Republic Airways is a market leader in the regional airline sector and we are thrilled to announce them as our launch customer. Joe Ullman, Republic Airways Chief Finance Officer, said Halo demonstrated a high level of underwriting expertise to deliver a compelling financing package for our engine assets. Their clear understanding of the asset class and insights into the nuances of our engine operations made structuring the transaction seamless from the onset. Halo launched in March as a bespoke lending platform focused on secured debt solutions for airlines, lessors and investors across a broad spectrum of aircraft and engine types. Meanwhile, aircraft lessor TrueNord has closed a new 5-year term loan of $275 million to expand its aircraft assets. TrueNord said that the cash will also help to finance a well-diversified portfolio of 31 owned regional jet and turboprop aircraft currently on lease to 13 different airline customers based in 11 countries. They went on to say that the loan will facilitate further business development and help with a targeted growth strategy, which is endorsed by cornerstone investors Freshstream, BlackRock and others. And Bart Thielemann, the chief executive at TrueNord, said that with the successful closing of this secured long-term financing, TrueNord has been able to further increase its group of relationship banks, supporting the continued growth of the business. We have broadened our financing resources and the facility gives us the ability to aim for further market opportunities, like portfolio transactions for new and used aircraft. The loan was arranged by Morgan Stanley as sole structuring agent and lead placement agent, Citigroup Global Markets, RBC Global Markets and SG Americas Securities as joint placement agents, and MUFG Bank and BNLB as mandated lead arrangers. The lender group is made up of MUFG, BNLB, Cathay United Bank, ABSA Corporate and Investment Banking, Morgan Stanley and Umpqua Bank. Legal advisors Clifford Chance acted on behalf of TrueNord and Milbank represented the banks. Thielemann said, "We work closely with our customers, offering a range of lease options to support their business growth ambitions. Strengthening our position with additional funds sends a positive signal to all partners." He added that he was proud that the finance community sees TrueNord as a secure and credible investment partner. Moving on now, and the Jet Zero Council has revealed an action plan for the next 2 years to achieve decarbonisation targets by 2050. Through this plan, the Council has committed to continue working to speed up the design, manufacture and rollout of zero-emission aircraft and vital infrastructure at UK airports. The Jet Zero Council, comprised of industry, academic and government leaders, met this week at Farnborough Airport. The plan sets out how the Council will help to accelerate the production of sustainable aviation fuels by continuing to invest millions of pounds in first-of-kind SAF plants, supporting crucial scientific research on a larger scale and helping to drive down production costs. Mark Harper, UK Transport Secretary, said that this government is a determined partner to the aviation industry, helping accelerate new technology and fuels, modernise their operations and work internationally to remove barriers to progress. Together, we can set aviation up for success, continue harnessing its huge social and economic benefits, and ensure it remains a core part of the UK's sustainable economic future. Emma Gilthorpe, Jet Zero Council's CEO, said that the 2-year plan published today, building on recent government commitments to secure demand for SAF in the UK, will ensure that we continue to accelerate progress and achieve the Jet Zero Council's objective of delivering 10% SAF in the UK fuel mix by 2030 and zero-emission transatlantic flight within a generation. Here at Airline Economics, we are committed to supporting the aviation industry in its journey to net zero. And at this year's Airline Economics Aviation and the Environment Summit hosted in Dublin on the 11th and 12th of May, we will be providing a platform for discussion, innovation and knowledge sharing in the field. You can register to join us free by following the link below, and we will also be announcing the winners of the Sustainability Awards 2023 at the event, where there will be a ceremony to recognise the individuals, organisations and deals that have stood out when it comes to sustainability and the environment in 2022. Let's continue with some more sustainability news now, where Air France and KLM signed 2 ESG KPI-linked revolving credit facilities with a large pool of international financial institutions in February for a total amount of €2.2 billion. For each facility, a set of ESG-linked key performance indicators are embedded into the financing cost. The indicators are in line with Air France KLM and the two airlines' commitment to sustainable development and a gradual decarbonisation of activities. The two RCFs include a financing cost margin adjustment mechanism, upward or downward, conditional to the independent achievement of dedicated indicators, which include the reduction of CO2 emissions and the increase in the use of SAF, among others. This set of agreements is the second successful sustainability-linked transaction undertaken by Air France and KLM after its inaugural sustainability-linked bond issued in January 2023. Air France, KLM and Air France are the combined borrower for the €1.2 billion sustainability-linked RCF, and this new facility has an initial 2026 maturity, includes 2 one-year extension options, and provides for a €100 million accordion increase option at the lender's discretion during 1 year following the signing date. The RCF was coordinated by ABN AMRO, ING and Rabobank, with Crédit Agricole Corporate and Investment Bank acting as a coordinator for the ESG targets, and it was concluded with a syndicate of 14 international banks. In more finance news now, Maldivian has issued a request for proposals for the purchase and lease of 5 new or second-hand ATR 42-600s. The airline plans to lease the aircraft for 12 years if they are new or 6 years in case of second-hand aircraft. The second-hand aircraft must be free of major maintenance events planned within the next 24 months, 8,000 flight hours or 6,500 flight cycles, and delivered fresh from a C-check. The engines must have at least 5,000 cycles remaining on their service life. The bid requires the turboprops to be cleared in terms of all airworthiness directives and mandatory service bulletins for at least the next 2,800 flight hours or 1,200 cycles, whichever is limiting. The airline plans to source 1 aircraft for sale and leaseback under an operating lease, with delivery expected in Q4 of 2023. 3 aircraft under operating leases with deliveries in 2024, and the final aircraft under finance lease with delivery in Q1 of 2025. The aircraft will be based out of Mail, and the airline is expecting proposals for 46-seat single-class layout. The deadline to submit proposals is on May the 4th, and the airline is planning to notify the top 3 bidders on May the 21st. In airline news now, Emirates is ramping up its capacity across GCC and the Middle East ahead of Eid to meet the travel surge during the upcoming holiday season. The airline is expanding its schedule this week to offer 38 additional flights across 6 cities. The airline anticipates over 110,000 travellers during the peak Eid holiday period, and in the Kingdom of Saudi Arabia, Emirates will be adding 4 extra flights from April the 19th to April the 29th to and from Riyadh to cater to Saudi travellers looking to venture to Dubai and beyond. In Jeddah, the airline will be operating 3 daily A380s and will additionally add on 6 flights operated by its Boeing 777 to serve the peak travel holiday period from the city between April the 20th and April the 25th. Going ahead, the airline will also serve specially crafted Eid menu for customers between April the 21st and April the 24th for flights departing from Dubai. And in our final story on this week's roundup, Air India is planning to buy out the government-owned maintenance, repair and overhaul company AI Engineering Services Limited, and could partner with Lufthansa Technik and the engineering unit of Air France KLM. Prior to privatisation, AIESL was Air India's engineering arm. The MRO remained with the Indian government along with several other airline subsidiaries in a special purpose vehicle set up in 2019 for holding non-core assets and debt of Air India called Air India Assets Holding Limited. As of now, Air India continues to outsource its aircraft MRO work to AIESL at the same time as developing its in-house engineering solutions for its expanding fleet needs. But Air India wants to acquire the company as soon as the government puts it up for sale. Speaking to the Economic Times, an Air India executive said around 90% of Air India's engineering needs are fulfilled by AISL. That's all for this week's Aviation News Roundup. We hope you found the updates and analysis informative and valuable. And if you enjoyed the content, please don't forget to hit the like and subscribe button to our channel to stay up to date on the latest information and news from the aviation, finance and leasing sectors. We appreciate your support and we look forward to bringing you more news and analysis in the weeks to come. Thank you for watching and we'll see you next week.